Welcome everyone to the Kendall Report. It is Monday evening. Had quite the day, a lot of downside. Looked like last night when I came in, I was talking about this in the live room today, that it looks like as the night went over, as the overnight trading went on, the algos kept getting weaker and weaker and projecting lower prices to the point where we were trading at the lows of the session as we finished today. So before I get into too much more, make sure you hit the like button. Channel's starting to improve a little bit, more views. Make sure you hit the like. I mean, it's free. Give me at least a like, and make sure you comment on these videos as well. And be nice. Just don't call me names. You can disagree, but don't call me names. So anyway, that will get you banned for sure. But anyway, glad to have dialogue always. So let's just get into what I think is going on here in the markets. Today was really some realization. I think it was some pre-Fed jitters that happened, and we're just seeing a bunch of folks squaring up the books ahead of the FOMC meeting, and I think that's really all that was going on. There was some little rumors going around that the Fed's nervous about inflation coming back, but these are headlines, and you have to understand that the algos had every advantage, and they wanted to keep grinding down all day. Like I said, right to the point. The very last couple minutes of trade at the end of the day, we did see about a 10-12 handle bounce off of there, and we're still trading up here right now at around 40.30. We actually printed down to 29 handle with a few minutes ago, so no big bounce or anything going on here, but some stabilization. Let's talk a little bit about, last night I did not have the numbers. I apologize for all of the earnings. There were quite a few earnings that came out today. That was also a little bit of negative influence. But as we look at, there was actually 113 of them. 77 due out tomorrow. Exxon, Pfizer, a bunch of pretty big companies coming out on Tuesday. Some of them before the market opens, some after. So make sure you look at your sources for that. 142 on Wednesday, 209 on Thursday, 59 on Friday, and roughly 600 reports coming out this week. And about 100 of them are material. There's some really big reports. So this week is really stacked up with a lot of things that I believe you're going to have to pay attention to. So there's going to be a lot of moving targets running around as we go through the week. And I'll show you something here when we get into the algos, and it was something we spent some time in the live room today. When these algos make a flip around, it looks like maybe that was a one-day wonder. We came down, and I'll go through the technicals here in a minute, came down to the 10-period moving average, which looks like to me should hold, which is right in that 30 handle, that 40-30 number from that standpoint. But anyway, more on this in a few minutes. So let me just look at any other. Yeah, the other thing. So let's talk about my title to this video tonight, which is January a predictor of the balance of the year? So let's flash back for a year ago, and the way the first week went ended up to generate how the month went, and the month did generate a lot of downside. We saw. I remember talking about this, a big upside. A big reversal on the downside, and that signaled into a quarterly reversal into the first two quarters, and actually flowing into Q3. I saw some troll on YouTube come in on some comments and picking out some of my take a date and see if I can make this guy look wrong. Everybody that hung around this channel knows last year was very negative, especially after the month of January. It turned pretty quick, and the way the month of January went did actually indicate a lot that's going on. Now we're starting the opposite. Right now, S&P up 6%. Tomorrow's the final day of trading for the month, so we've got NASDAQ up 11% on the year. I didn't catch the Russell number, but those two numbers we've had a good month, and it's been very solid. As you know, and I'll go through the details here in a minute, the market, the Wavetech database was also very robust as well. We're up over 50% of the stocks now in trend mode, and that's 1 out of 2 stocks. That's pretty significant. I always talk about this 42 handle number, 42% bullish. We got over that a couple of weeks ago, and we just keep getting gradual traction here, and so that'll continue. I'll go through the whole database routine here in just a few minutes, but I want to talk a little bit about this because I don't necessarily believe, I don't like these little cliches, how January goes or how this goes, then the rest goes. But I have seen some evidence, the January effect. It's been called a lot of stuff. But it looks to me, what I'm queuing off of is the database, the traction that we've gotten. All that stuff means a lot. And I know I've talked to several of our institutional clients today and they're all liking how this year is starting, right? Everybody's like, hey, this is a good year compared to last year. We did come into 22 with a fair amount of cash on the books. In fact, we spent over 3/4 of the year in heavy cash. In the case of the database on an intermediate level, we were at one stage down below 10% for a number of months as things got pretty ugly. We did see a rebound in the fourth quarter, but everything that seems to come out, I think that we've got something going here. And the Fed, I saw a comment somewhere on Twitter or something. Somebody said the Fed needs to tell the market that it's not supposed to be going up right now. They need to send a clear message on that. And the reality is, the Fed is not really directing the equity markets. I've talked to you a number of times, and as we come into the Fed FOMC meeting, which there will be a live stream, I'll be live when the FOMC comes out on Wednesday, so we'll be here together on that one. But as we come into this, keep telling you, they're not going to change their theme. They're going to stay on the inflation. They're not going to back off this thing. They lose all credibility if they do, and they're trying to destroy and break the market, but it won't break, which is kind of interesting. So, like I said before, most people are still expecting a mild, I'll do air quotes, mild recession, right? That's pretty much the consensus out there. And I just think I saw an interesting stat. If you take the S&P 500 and you look at the multiples on the whole S&P 500, you get a multiple about 17. Sounds pretty pricey. But if you take that top end of the market out, and I think it was 435 stocks, all of a sudden the multiple's 13. And this is kind of the theme that I've been talking about, is that these secondary stocks and not the top end of the market is what's going to probably drive the market. And that's probably why we won't make a new all-time new high anytime soon, because these secondary stocks don't have the weighting that the other stocks have. And I'm looking at a lot of things that we're getting traction on in the database, and these are the type of stocks that are going on. And there's some amazing gains going on in these secondary stocks. So while you're looking at the Teslas and the Apples and all that, you're actually missing what you should be looking for right now. And so, that's one of the advantages of having Wavetech and having that database there. You can see the output every day, and you can see where this stuff is rotating. And especially on PortfolioXpert, you can actually do a data search, you can do a data mining and get all of this stuff. So it's the point of all this is the opportunities aren't necessarily where you think they are. And you have to dig deeper, and you have to go below the surface from the standpoint of what you see in the top end weightings in these indices. So there was a great advantage, and this just kind of triggered me into the year 2000 when the .com situation was going on. We run a portfolio with our software where we put all 500 individual stocks, still run it today, but we put those 500 stocks in there. And it was interesting because while the market finished negative in 2000, that strategy that rotated out of the top end of stocks, and back in the day it was the AOLs and all of that stuff that was out there, and all the .com and some of these stocks that have rotated in to the S&P. Well, we were up, I think, around 11%, like 10.8% on 2000. Why? Because we rotated and got out of the top end stocks and rotated to those secondary stocks. And now that we turned the clock forward 2 decades, now we have a much different configuration in the markets, and there's a lot of these so-called secondary stocks which have grown. The capitalization is quite large. They would have been the top end of the spectrum back in 2000. So there's just a lot of opportunities, but they're not where you think they are. So make sure you dig a little deeper in some of these secondary stocks, and don't just and mostly, and you have to know, not all, but most ETFs are also weighted that way as well. That's why we do these ETF hacks, where we shred the ETFs and reconstruct them and how they're going. Because if you look at a typical ETF, the top probably 10 stocks represent anywhere from 30 to 50% of the ETF. All the other stocks are what I call pie filler, and all you get out of that is, they're just stocks that they can throw a lot of money in. They don't do a lot, so they're any ETF, no matter what the theme is, and even the indexes, even the S&P indexes are all weighted. So everything is weighted toward what that manager thinks is the best bet in that sector. Sometimes they get it right, sometimes they don't. But a lot of times you can really do much better. I know we run something off a First Trust Target 25 strategy, which is way outperformed the S&P. It's way outperformed the strategy that First Trust punts out. But it's because we're able to rotate and rebalance where the weightings are. So I won't go too deep into that, but that's the point of the software that I built many years ago, decades ago, and just to automate that process. But my point of telling you that is that look elsewhere for some of these opportunities. There's some pretty good ones out there. So let's go ahead and get into the database tonight, and I should be able to get through pretty quick. I think it's pretty much summarized what I was talking about last night. So let's go ahead and take a look at the Wavetech database. Okay, so we did see just a little bit of selling. We saw some 656 sell signals, 56 buys. We dropped from 77 plus down to 75.51. So we're seeing a little liquidation maybe starting to come in the short term. And this is what should happen. We're looking at a lot of these, the duration. Let me just zoom out full page here for a minute. You should be able to see off on the right-hand side if you have a big enough monitor. If you're on a phone, might be a little difficult, so I'll tell you what it is. But over here, the optimized daily, right now, we're looking at the average duration right now is about 22 days. We're about almost 60% of the duration has been realized. So what's going to happen, we'll start to sell out of those stocks that we bought 30 trading days ago, maybe 40 days ago. So we start to see the rotation, and this is important. And then the stocks that have come in over the last couple of weeks will start to lead the way. And we should start, this is possibly the point where we'll see the short-term database start to back off a little bit off of this. It's been printing close to 80%, which is really substantial. So looking for 68 to 62 now, looking for it to rotate back out and start to see some of those older trades drop out and the newer trades take over. And then once we get to that range, if we get down to that level that I'm talking about there on the rotation, is what we'll see down the road, maybe 30 trading days, that's 6 weeks roughly from now, we'll start to see some positive rotation back in. We should stay well above 42, but my expectation is probably about 62%. So we're at that. It looks like maybe we're entering that stage. We're going to see that rotation start where there'll be some liquidation on the short-term database. It's going to get less. It's going to start taking a lot of these profits on some of these symbols as they start to print up and then start to roll over. We'll see that come in, and then that rotation will happen. And typically, when you look at the daily database, what's going to happen, it gets up to this 70 plus, in this case, almost 80% bullish, and then it starts to back off, and then it rotates down to as low, it can go around 58, 62%. Then we start to see a secondary rotation. We usually don't go above 80%, but there's 20 plus percent of these stocks will rotate back in, and then you get, that's kind of the final run for that cycle. Meanwhile, while all that's going on, the intermediate database will continue to get traction, looking for ultimately a 62% plus on the intermediate. If that comes to play, then we're likely to see further rotation that will kind of confirm my expectations of a Q1, Q2 basic positive tone in the markets as we go forward. And I think it's getting harder and harder for folks to find this negative, I guess, rotation that everybody, it looks like to me anyway, there's an awful lot of negative voices out there, and everybody's just waiting for the shoe to drop that may not drop. But this is kind of the overview of the market. So let's go ahead and get into the technicals here and dig into the S&P. Okay, looking at the hourly chart, which I usually start with every night, we're seeing some pickup here. And what we're seeing is the hourly is actually giving us some projections for 40.68, 40.81, 82 actually, and 40.90. So it looks like we've got a shot to move back up to the 40-hour moving average in here. And the algos are suggesting not a lot of big positive, but it is suggesting that we're going to challenge at least the 21, 40, 50. Above that, then it's a sort of a clean shot, 40, 70, 40, 80. Extreme would be 40, 90, getting up to these fib targets on the upside. But you also see even down here on the PPM 200, the 200 is looking like, let me see what time this is, about 1 o'clock in the morning, 3 a.m. Eastern time. It's looking like everything's going to start to try to move up or at least stabilize, and we should remain above this, possibly the 10 and 21 hour moving averages. That's 40, 43, 40, 50. There is, I'll bring this up, there are some downward projections, and the absolute bottom end of this right now is for a 40.08. The 200 moving average is 40.14, 40.08. Like I said, we printed down into the 29 handle yesterday. Looked to me that was pretty close to what I would call probably the extreme of this pattern. Let's go over to the daily chart here. Let me get to the right chart. So daily is kind of interesting because this is where I was talking where the algos are looking like on Wednesday they want to turn positive. So is that a Jay Powell pump? Is he going to say the right words from that standpoint? And I see we've got one of our favorite bots showing up. But the patterns that are showing up here are fairly positive, and this is the daily. It looks like we're going to stay in positive trend mode on the PPM2, which is that support level is 39.70, going up about 8 handles per day. So we'll be in the next 2 or 3 days, we'll be pushing the right at the 4,000 level. Will be some pretty good support. I don't see that we're going to break through this in this kind of configuration. It looks like what we're getting is just a little rolling, some testing and some support. We could get some choppiness. And I think after today, this is what we're going to see. The market grid's going to turn up and all that's going to happen. So let's go over, let me bring up this so we can get to the market grid here, and just so we can see what's going on. And the grid is suggesting we've had a low of 40.35, S1 40.27, R1's 40.52. I would look for a minimum of R2, which is 40.66. And I think there's a reasonable shot of trading back into this 40.80 level. And listen, folks, we've been trading in this range for multiple days. And I think this is just setting up for the next consolidation move. I did see that we exited one of our intermediate positions on the weekly chart, but the daily chart is still staying positive. And the way the PPMs are configured, we're pulling back into some of the support lines. So we could spend another couple of days sideways. I suspect going through Tuesday, coming into Wednesday, we'll see what kind of patterns that set up into the Fed meeting. Like I said, we'll be live at that time. Yeah, it's kind of interesting. I think yeah, with the trolls, they're just out there. It's interesting because oh, I just realized something. This is an issue, folks. So bear with me. I'm not going to be able to kill these. Well, and I did get some emails from you folks, so I'm not going to be able to kill these guys. I just realized I can't kill them. I'm logged in on the wrong account, so that's unfortunate because it looks like I'm not seeing them on this other account. So I apologize. So let's just go on and just ignore them, okay? We'll get some moderators. I'll reach out to some folks tomorrow. I've got more time in my day. So as we look at everything here, let's go back over to TradingView and get to the daily. Algos are looking pretty good, so we'll stick with that. Let's go ahead, get into the NASDAQ. So NASDAQ is similar pattern, but it's actually a little stronger. It looks like we have at least 2 more days where this support line is going to be significant. That's at 11,851. So that's going to be your key support right there. Last trade 11,992. We should bounce off that level. Like I said, my expectation is that the market grid will turn up tomorrow. We should get, it just depends on how we finish up. I think we'll finish up just like with the S&P. We should see it get back above. We're probably looking S1 R2. That would be 12,100. So that'd be a couple hundred points. We should trade in that upper end of the range. Yeah, David Hands. Yes, they can. So, yeah, I think you'll find. Yeah. Anyway, I'm not going to go there. So as far as the NASDAQ goes, everything's kind of situated the same. So let's just run through these. We'll get into. We should be able to finish this tonight's video pretty quickly. So here's the Russell traded. This is the daily trading down right now toward the 10-period moving average as well. That's at 1880. I think actually I took off a lot of stuff here. Let me go and let's put the indicators on. Let's put the fib projection tools up here on this chart so we can see that. You see we still have these upward projections that are valid, that are suggesting a move up towards the 2007, 2076, and 2120 roughly. I'm just rounding numbers off, but we should hold in these support levels. The key level to watch on all of these indexes, the S&P, NASDAQ, is going to be the simple 21-day moving average. That would be your ultimate buy if you get down to those levels, especially on a spike on Wednesday or something like that. So, but as again, it looks like at least the algos are trying to set up, and I went through a lot of detail in the live room today on how this stuff works, and I'm in the process. I'll just tease you guys. I'm writing an article, so if you signed up for my Substack, I'm working on an article that explains exactly how some of these work and how one of the primary theories that I've operated under for 35 years, 37 to be exact, is this angle of attack theory on utilizing these moving averages. So I'm working on this pretty big article. I think it's at almost 2,000 words right now and growing. So it's got graphics and all kinds of stuff. So look forward to that. And if you want to sign up, you can go to kindlereport.substack watchlist.com, and I will be putting that out. All right, next we'll go through the 10-year. It's interesting because yields are looking like they want to start to increase again. There's some pretty decent resistance right now at the 357, 358 level. We'll get above that. We actually have Fibonacci targets right now for basically 390. And I think that is really the range that that you should expect to see that type of spike in. I'll just, I think if you look back, this is really the range that the markets have been operating in. So we're just looking at really just zigzagging here in this big trading range, and so yields are going to get locked down in these areas right now. I don't see them getting out, but it does look like the algos are starting to suggest. You can see the PPMs have turned up. The PPM 2 is losing its momentum, but there's still a lot of resistance at that 57, 58 level, and it looks like a little bit down the road here as we come into the end of the week, maybe after the Fed meeting, there'll be some boost up on the 10-year as far as that goes. That should get us to a point where we potentially get over this 360 level, rounding it off, and then potentially heading up 370, 380. But nothing's going to be drastic in here. It's really just a trading range from that standpoint. Yeah, we're going to roll through the rest of this presentation tonight pretty quick. Crude oil was under a bit of pressure. This is a daily. Looks like we're going to remain under pressure for at least another day. We got fib targets on the downside right now at 70, 73.60, 70.17. A little bit of downside coming in here. There's decent support right now at the 77.25 level. So we're trading into those support levels, just above them as we speak. If we hold here, then we're probably just going to stay in the range. I think in the next couple of days, if we see the market grid turn up, then we'll probably see the potential for trading higher in this range. And the joke of it all is now that they've blown up the SPR, they're going to have to buy it back at some stage, and they're going to become the Biden administration, Department of Energy is going to become their own worst enemy, I think, at some stage. So there's still, and this may be an element that keeps things going as they are. I talked about this before, is that really what we're looking at here is inflation's not going away. It's just not the primary story anymore. And we're going to see an evolution of how things unfold as we go forward. And it'll be interesting how we get through this week, because not only do we have the Fed, we get some material earnings coming out. We've got unemployment coming out on Friday. So we've got, this is a pretty big week. But I think what we'll see here on all of these commodities and stuff is just a stabilization. I don't think they're going to be able to knock this down a lot, but we'll see what happens. And I'm looking forward to the live stream on Wednesday. Just to remind everybody, if you're watching the video here, that I will be live during the FOMC meeting. We'll come live at 1 p.m. Eastern time on Wednesday. So come hang out. Maybe we'll even get a chance after that, depending on what kind of crazy volatility we get, to maybe do some individual stocks and some other stuff. So anyway, make sure you mark your calendar on that one. Next, we'll cover gold, and gold just continues to look good, although I think we're going to see a bit of consolidation up here. The range on the downside, I mentioned this last night, that we're probably looking at an extreme on the downside around 1900. We should just set up a big trading range. And I'm going to flip this over to the weekly chart, and this actually tells a story. The expectation is that we set up some kind of consolidation here. We could back up to where the 10-week moving average is, and right now it's at 1864, but it's rising, and it's going up about 20 per week. So in the next 2 weeks we'll be 40 higher. We'll be right at that 1900 level. So that's kind of the point where I'm looking at really being major support there. So if you miss this run, then there'll be another secondary opportunity somewhere in the next, I'm going to say 3 to 4 weeks to come into this thing. Yeah. So yeah, I think this is an awesome pattern. I don't know if you folks remember. I know some of you that are on here watch pretty much every day, and you'll know that I was just screaming about the algos, how they on a weekly were predicting this big move coming when we were trading down here in the 16 handle, 1600 level. And man, did that come true or what? And so now what they're projecting is they're bleeding off everything, and what's about to happen is this 40 period moving average is about to turn up. I spent a fair amount of time in the live room talking about these moving average patterns, and I think that is what we're seeing, a next level bottoming pattern come here on the intermediate gold. And I've already said it, but I mean, we're looking for potential minimum 2000 is a joke, but we could see 2400 plus on gold. So I'm not sure what's going to trigger that as of yet. And I think what we'll see from the standpoint of these trends that are unfolding is this big consolidation. And I think they'll set up on the monthly and the longer term secular charts. That's going to be key to going forward. Okay, final market, Bitcoin. I was talking about this thing retracing. This is weekly. Let me flip this over to daily. See if I can get the scaling right. So daily, we got through the 10. Algos were predicting that. They're still predicting we should challenge the 21 period moving average, 21,810. That should be at least tested. We're right now 22,881, so there's probably some more downside. I look at the market grid from the standpoint of S2 22,404, S3 22,178. We could see those numbers get hit. What we're likely to see, however, is that this thing is most likely stabilizing around that 21. While the 21, you're seeing the algo suggesting this is not actually predicting downside. What it's telling you is that the upward momentum is bleeding off, but there's still, if you look at the values over here, you're still going to be well above the 0.25 angle of attack. So you're going to have support at that 21-day moving average is going to continue. It's going to actually compress and squeeze the market in between those levels right now of 21,810 and 22,900. Actually probably better say 23,000. It's going to compress in there, and I don't think we see a big rally, but we'll see what sets up. It looks like we're just going to compress, get into a tight range, and then we'll be able to figure out what the next move is. But there should be, the minimum at the moment is down to 21.8, and that should be a pretty good idea from that standpoint. Okay, folks, I'll come back up live here at the end. Thanks again for putting up with the trolls and the bots. We're going to get that fixed. And then ultimately, make sure you mark your calendar for Wednesday live stream during the FOMC meeting. And as always, I'll be back tomorrow night, and see you same time, same station. Thanks for watching. Hit that like button. We're short of 1,000 likes. At least give me 1,000 likes, okay? And if you haven't subscribed, do that too, and share these videos. Thanks again, everyone. Have a great evening. Have a good day trading tomorrow.